A lot of people talk about Airbnb and how much money they're making, but few tell you how to start. My Airbnbs bring in tens of thousands of dollars per month, and I'm going to give you guys a step-by-step guide on how to get started right now. First, identify a market or location. You can Google tourism numbers. This is Nashville, for example. You can see the year-over-year growth in tourism. You also need to use tools like AirDNA. AirDNA has a ton of data on short-term vacation rentals, gives you a market grade, average daily rates, and occupancy rates, and even shows you all the rentals in the area. Second, work with a local realtor who understands short-term rentals, and the primary client is investors. They will understand local laws and permits and will be able to sift through properties to only provide properties to evaluate that are eligible for short-term rentals. Third, get pre-approved from one or more lenders. With short-term rentals, it's really cool because you can leverage a secondary home loan, which is viewed as your own personal vacation house, but you're allowed to rent it out when you're not using it, so you could put as little down as 10%. Beyond that, you could do a conventional investment loan for 15% down, or if you don't qualify on your own income or DTI, you could leverage a commercial loan or portfolio lender or private money, and most likely put 20% down there. They'll base the loan on the asset's projected performance and the debt service coverage ratio. But once you're pre-approved, you don't have a budget to work with. Fourth, learn how to evaluate properties by the numbers. This is my investment analysis tool. Put in all the investment details, all of the costs that you need up front, the forecasted revenue, which we can use AirDNA to help, all operating expenses, and ultimately it will spit out our cash flow. And most importantly, the cash on cash return. Cash on cash return is basically seeing how hard your money is working for you. It's the total annual cash flow divided by all of the money that you had to come out of pocket for this investment. My minimum requirement here for short-term rentals is 25%. In the analysis, make sure you account for furniture. If it's not a turnkey property sold fully furnished, you guys are going to have to come out of pocket for furniture. 5. This is one of the biggest mistakes I see investors make, and this is to have a wow factor. Most people miss this. Don't just stand up some basic ass Airbnb. How are you going to stand out from competition? Anything unique about the property or something you can create to create a memory. How do you cater to someone's emotional appeal to make sure they click your property? Some examples are interactive murals, an outdoor entertainment space, anything on your property that makes it special or unique. Make it Instagrammable. Airbnb is no different than TikTok or Instagram. It's all about attention span and click rate. 6, once you close on the property, you need professional photos. Do not go taking it with your cell phone. 7, interview and hire local cleaners that have great communication, and also hire a local maintenance and lawn care service, whatever you need. Do not try and clean the place yourself. It's a huge time suck, and just focus your time on making other investments. 8, once you stand up your listing on Airbnb and VRBO, you need to onboard automation tools. This is how to create a mostly passive income stream. I use YourPorter and Price Labs. YourPorter will sync cross-platform calendars, automate messaging with guests, and all that. Good luck.